Hello friends, in this video we will take another look at sentiment data and how we trade with market sentiment. In the bottom you see here the sentiment data. If you watched my videos you know what tools I use. And we use contrarian approach. We go the opposite way to the predominant direction, to the predominant sentiment force. So if red is dominating, the bear is dominating in this indicator below, we go along. Very simple. And if the bulls are dominating, then we go short. Right now we have the bearish dominance. That means we look only for longs, nothing else. We don't go against the trend. We don't open short positions while the retail bears are dominating. You see the bulls are below 6,000 lots. I added this line, this yellow line. It's just a level, horizontal level of 6,000 lots. And as you see, since the March, since basically since 16th of March, the bulls are staying below 6,000 lots. They do push, they make pushes above it, but let's say where they stay. And you see right now the bears are dominating. It means price will be going up. So price moves exactly opposite to what the retailers and algos are doing. So, and we also have a signal here from MACD already for a while. The green candles, this is MACD candles, the same like MACD indicator. Also added Ichimoku Cloud and Camarilla Pivot Points. So it's fairly simple. Trading is very simple. You don't need to overcomplicate it. I mean, looking for all kinds of support and resistance, trend lines. If you're using sentiment, it's dumb simple, very simple. Look here in December. Would you sell in December? No way. Why to sell when you see that the bears sentiment, the bears are dominating and the bulls are staying below 6,000 lots? It means price will be going only up. It goes opposite to the retailers. You see, there's no reason to sell in December. I would never take a short in this condition. Only longs. And I mean, it means your stop losses will never be hit, very rarely, because you are on the right side of the market. If you go against the trend, of course you will be kicked out. But if you are staying on the right side of the market, you will be right nearly always. Now look here in November. Who was the dominating force of the month? Bears. Price will be going up, only up. By the middle of the month it was clear, like already by the 10th of the month you could see that the dominating force were the bears. Price will be going up. There was some confusion at the beginning of the month, like by the force. It would be, you could think that the price will be going down, and maybe this would trigger, I would trigger a short. I would go short here because of sentiment data, and it's possible I would be stopped out because this would be probably a stop loss hit here. I would go probably short because bulls were dominating. But by the middle of the month, you could see that the dominant force was actually the bears. Price will be going up. So you might run into stop loss once in between, but most of times you will be right. Like here, you could see in October, you could see that the price will be going up primarily because the bull line was more often above the red and the red above the blue. And it like had controlled more space. It had more breathing territory, as you see, occupied. You can measure this space, like you can see it visually, that it is simply more territory they control it, more space, more volume than the bear. So price moves the opposite. And there was no doubt in September, it was the bearish month, no doubt. I would never short. I would never go long in September, because already by the 8th of the month you could see that the month will be bearish, because the bulls were dominating, retail bulls. Price moves the opposite. Of course, I might have been stopped out with this move, because it was big move, 150 pips against the dominating force. So, but otherwise, I would look for shorts. Then still I would short again, and probably during this pullback I would short again, and because I knew that the bulls are dominating, price are going down. So otherwise, it's very simple. You know how to use Camarilla Pivot Points, and super simple trading, as you see. Okay, much was complicated, but still the dominating force of much, you could see it clearly, and you could see it already by the 15th of the month, that the bears controlled more territory, more space. You see, well, the bulls were doing those sharp pushes, but they were returning to the very bottom very quickly. So overall the reds controlled more territory, so price will be going up. By the 15th it was pretty clear, and that was also the case. Then further during the months, like 22nd, you could also see that the dominating month force, where the reds, price will be going up. So we also were in bullish territory in Camarilla, level between the opening range, those blue lines, and the roof is called the bullish zone. So price never traded in the monthly bearish zone. So you had another indication that we are going up, and we are in the bullish territory. And also MACD candles, you could go alone on each green signal with MACD candles. So MACD candles do have an advantage. Sometimes I use them because MACD is a unique indicator. It's one of the few indicators that I may use occasionally. Ichimoku, I like to use it also in between. It's a moving average indicator based on moving averages. So here we see that the price is likely to go higher. I don't know when. It's we have been ranging now for a long time, and you see staying flat. But candles are green. MACD is given buy signal, and also we clearly see that there is no even question about it, that the reds bears are dominating the market. This means price will be going up opposite to their positioning, opposite to the position of the retail bears. You see right now they are at 7,000 lots short, and the long side 4,593 lots. So, and it's very likely that the blues will stay below 6,000 lots. It's like a filter. You see, it's very easy to see who is controlling the market. If you add this filter 6,000 lots, you can play with the levels, but right now it seems like 6,000 lot is a good level to filter out who is controlling the market. You see, so you shouldn't add too many levels, just few or one just to have it simple. You can also remove Ichimoku is not really even necessary. So just have MACD candles and Camarilla, and that's it, because you know where the reversals take place. Here I would be short here when we were at the reversal level, R3 reversal level monthly. No, we wouldn't short here because the dominating force of the months are the reds, so price will be going up. It was going up, but how fast? Very slowly crawling up. For 90 pips for half a month, just 90 pips. Sometimes euro doesn't move. So pretty simple trading, pretty simple. So in the same situation now, we are like going flat, but slowly moving up. I wait for the push up. It will be very sharp move during one day, maybe during one session. I don't know when it will happen. Usually those sharp moves up happen during European session, London session, and they are over by 2 o'clock GMT, like by 4 o'clock Frankfurt time. Those big moves are usually over. So I kind of doubt that it will happen now. As already Europe markets, Europe banks are closed. American session rarely breaks above the European session when it comes to EURUSD. There are some exceptional days, but most of times, if you wish to day trade, you can just trade to. You can keep a long position if you are trading with this move all until 4 p.m. Frankfurt time. So you can see it for yourself that London session very rarely breaks above the European session. So that's when it comes to trading EURUSD. So we expect another push from the Reds, and it may be quite significant push, because you see they're making quite big highs now. You see this was pretty big, this, so we might even push somewhere here, make new high. I don't know. They do fall back very quick. They don't manage to stay at those very high levels, but you see the Reds proved their ability to stay at around 11,000 lots since March, so there is a chance that they will push again to those levels. Though I don't like this drop, this sudden drop was not very good from 14,000 lots, very sharp drop. But there was also similar drop here on the 5th of April from 16,000 lots, also pretty sharp. So it was also, they do have sharp drops also, the Reds, but overall they dominate the market. Anyway, so price will be going up. I wish you all the best.